Anyone who thinks this can't happen, just go back and look what happened there. And the insiders all got the information, were all positioned. And bear in mind that every single bullion bank that is making a market in the COMEX is also got a footprint in the compliant foreign exchange markets. They will, and bearing in mind that should something happen where you are in the foreign exchange, while you've got a foot in the foreign exchange market, you're going to benefit from this revaluation because it's not being settled. You're not being squared up in the FX markets. You cannot possibly rig a foreign exchange market. It's a simple cross between the dollar, gold, a dollar and silver, the dollar and the yen, the dollar. You can't just rig it.
We present the clips of Maguire's latest interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pinned comment. Stay ahead of the curve. Don't miss out.
I think what we're looking at from the bigger picture is we're now looking at the US becoming a part, from gold and silver is concerned, a part of the global reset that we're seeing now. And they've been like an anchor trying to fight this all the way. And I think we just reached the point where there's too much technology coming in now. There's the ability to value the gold price is being revalued globally, and that liquidity that you and I have tracked this for so long. That liquidity that was partially paper centric has been flowing ever so slowly, one day by day, month by month, year by year, to the point where the lines have crossed, and where the physical the price is being settled in the physical markets now. So it's impossible to not comply. And I think so. Yes, I think this is the next step. So I think, you've talked about ETF outflows, yeah, and that's concurrent with COMEX outflows, and people talk about, well, look, yes, it's all to do with tariffs, and we've seen these big EFP spreads, and no, the EFP spreads is simply because the paper markets are getting drained. Fantastic amount of, I make 5 o'clock in the morning phone calls to all my Asian desks, Chinese contacts, Indian contacts, Saudi contacts, etc., etc. And these desks, just every morning they say, hey, we're buying. Hey, guess what? The West's going to sell later. I think we saw that again today. The West's going to sell at the pit open. And guess what? We're just going to grab it. And so we've seen this ridiculousness, this absolute, to mind-boggling stupidness where Asia buys, the West sells. Well, trouble is, most of the open interest, the COMEX open interest, where you could go fool enough people to buy into that, sell short with you, pull a few bids, get them to take some profits quickly. Oh goodness me, we're going into hell in a hell basket. So I think while that has been going on, then literally that open interest, the 75% of all the oil traders really control that market. It's just pure speculation. It's why we got the volatility. Same guys that are running the gold and silver markets historically. It's just momentum traders, like 75, they don't care what the price is. It doesn't matter. They're not ever going to take delivery. It's nothing to do with them. This is just a paper trade. These guys have anchored their boat to Bitcoin now. To me, there's just not enough of these guys to take that bait anymore. And I think, so yeah, these guys are laughing their heads off and say to me in the 5 o'clock, hey, we'll keep buying, but we're going to save some dry powder for when the West opens. Is there settling? And they're saying, and this is the Bank of England and is saying, and the RBMA is saying, yeah, okay, but you can have it in 3 months. You can have it in 8, 10, 12 weeks. But what they're offering you is a paper forward. That's what they're offering you. It's a paper forward, which you hope you better get that. So the point is, a paper forward says, yeah, okay, so really I can now, because it's technically NSFR compliant, I can then marry that forward off into New York because it's supposed to be a first-year asset class, but it ain't. A forward is not. But this is the scam right now, is you've got the ability to actually say, yeah, well, here it is in 3 months. Here's the forward, and here we're backing it. The Bank of England is backing it. Here, we'll even give it to you at a discount. What kind of nonsense is this? And then on the other side of the fence, you've got an EFP where you've actually somehow squared the issue because, yes, it can be shipped out later because you're backed. I mean, on paper, you're backed, but you're not backed physically. And so as much as we're seeing bullion flowing into the COMEX vaults, the New York vaults, we're also seeing these same guys pulling it out and shoving it out the other way. So you've got this craziness going on here. And so to me, this is, yes, the break point. It has to be the break point. It is technically a default because really, if you say you can't deliver and it's T+1 compliant, the Bank of England, I mean, half of the vaults, the listed vaults, what's it in the vaults in the UK is supposed to be LBMA vaults, Bank of England vaults is supposed to be half of it's only half of it's central bank owned. So why is it taking this long? I mean, I could go in there tomorrow and unload a trolley load for an immediate delivery. Why would I have to wait all this time for what's supposed to be there? It's actually supposed to be there because they don't want to give it up. They just know that this is why what tells me something is going on. They're going to have to revalue gold. They're going to have to revalue it. The COMEX has to become Basel III compliant. I think this all feeds into what you're talking about. The new Treasury Secretary coming in, looking at this situation. But Andy, we know, we have empirical evidence to say if you are going to back US Treasury gold, if you are going to revalue, US Treasury gold, you need an audit. Well, hold on. We've got empirical evidence to suggest that there's a lot of double ownership. Whether the physical gold is there, I don't know. No one knows if it's physically there, but is it, how to what degree is it rehypothecated?
Recent reports indicate that global central banks, particularly in China and Russia, are ramping up their gold reserves at an unprecedented pace, signaling a growing distrust in the stability of the US dollar. While nearly all major banks have repositioned to go long on gold, the Federal Reserve and the Bank of England remain among the last entities holding significant short positions. This growing imbalance, exacerbated by Basel III regulations that elevated physical gold to a Tier 1 asset, has exposed a central banking cartel that relies on paper gold to control prices. As physical demand continues to outstrip supply, the long-standing manipulation of the market through derivatives appears increasingly fragile. The shift toward physical holdings by major institutions suggests that the system is reaching a breaking point, with the risk of a sudden repricing becoming more pronounced. Renowned analyst Andrew predicts that the scale of this imbalance is staggering, with billions in unbacked derivatives creating an unstable financial structure that could collapse under the weight of real demand. Historically, gold revaluations have been swift and decisive, catching most investors off guard. A scenario where prices surge overnight, leaving short sellers unable to cover their positions, is possible and has historical precedent. Those holding physical gold will emerge as the clear winners, while those dependent on paper contracts risk significant losses. Given the sheer magnitude of the derivatives market, any sharp move in gold's value could force central banks into a defensive position, accelerating the need for an official reset. Let's get back to the interview.
I think right now what you're describing is a gold revaluation by stealth. It is happening. under our noses, and people are not catching it yet. There's a lot of
They
people-
aren't catching it. They're asleep.
Yeah, but I agree. There comes a point where right now there is such a shortage versus because, long story short, I still believe that the Fed is suppressing. It is the Fed, the Fed in conjunction with the Bank of England, who is the sole holders of the short positions in the COMEX, which is primarily the COMEX. And because every first-year bank that I know, every first-year bank and every liquidity provider said, no, everyone's long and strong. As soon as Basel III NSFR conditions came in 3 years ago on the 1st of January 2023, everyone went long. So there's only really one entity, or a cartel, a central bank cartel, who is still short. Now, there is such a shortage there's such a mismatch. So can we, just because every bank now that even the guys, even the 5 banks that are managing the Office of the Comptroller short positions, technically compliant FX positions in gold and silver, all long for their own books. So it really smells of it. It can only be these central banks. Now, there's such a shortage and there's such a massive derivative imbalance because you take those OCC bets. So this is what I mean. So yes, by stealth, we are revaluing, but do we wake up on a Monday morning, because it would happen over the weekend, do we wake up on a Monday morning and say, tell you what, this is where your COMEX position was on Friday. This is where your paper position, this is why the people you are speaking to must always have physical, and I know this is your thing. Keep physical, only physical, because anyone who holding physical is a winner, but the only losers will be, well, I tell you what, we paper settled that at 3,000. Actually, we now think we're going to open up at 3,500. I'm talking about realistic numbers here. Then if you were short on the COMEX, I don't think you would be given the ability to cash settle. I think if you were short, then you would probably, unless you were part of the agent banks who act as proxies for the Fed, you probably, as happened at the Browns bottom when gold was $250, that happened overnight. That happened with, and GATA exploded. You remember this? GATA exposed the fact that UBS had gone to their clients and said, short gold, sell gold, it's going down, one day before the Bank of England announced 400 odd tons of sales. So yeah, so anyone who thinks this can't happen, just go back and look what happened there. And the insiders all got the information, were all positioned, and bearing in mind that every single bullion bank that is making a market in the COMEX is also got a footprint in the compliant foreign exchange markets. They will, and bearing in mind that should something happen where you are in the foreign exchange, where you've got a foot in the foreign exchange market and you're long, you're going to benefit from this revaluation because it's not being settled. You're not being squared up in the FX markets. You cannot possibly rig a foreign exchange market. It's a simple cross between the dollar and gold, a dollar and silver, the dollar and the yen, the dollar. You can't just rig it. It has to evolve. So, yeah, I think, Andy, I think this can happen. A hard resettlement could happen. I think in the meantime, what tells me that something's going on, that the new administration, and I'd really love to hear more about your Judy Shelton interview, because to me that's gold. But should they decide to do this revaluation,